Hey friends, Casual Wednesday here at THEbTEAM headquarters. Checking in with you regarding April and then year to date for 2021. We are on April 28th, so more or less through the month, and the data is very intriguing. If anything, it's really showing the impact that lockdown has, because we've seen it somewhat of a return to some of the imbalances or the exaggerated imbalance that we saw a few months ago. So the way I make sense of things, there's a few ways. One is what is right now in comparison to what was normal in the last 5, 8, 10 years. And then what is right now in terms of specifically comparing supply and demand levels and how those are shaking out. So I'm going to look at both of those. I'm not going to say quick because I always say that and it never is, but as quick as I can. Okay, let's go. One thing I really like to track is where is the current market activity in comparison to what was sort of normal over the last decade. So when we look back to 2011 and take the average for the last 10 years, and I know there's all kinds of highs and lows, right? Because you have the 2011, 12, 13 markets, which weren't lightning in a bottle necessarily. And then you have the 2015, 16, 17 run, and then 2018, 19 pulled back a bit. But if you average it all out, I think it's a fair shake of what the Niagara real estate market is to some extent. So then you look at listings and sales for so far this year, and how does it compare to the 10-year average? So I'm going to show you right here. So there is Niagara. So you'll see listings in January down 15% under the 10-year average, and 41% over in sales. So if you add that up, roughly you've got a 56% differential if you want to look at it that way. Sort of simplistic, but it tells a story, right? As we moved into January, listings improved. Now they were 14% above the 10-year normal, but meanwhile sales went 52% above the 10-year normal. Then you move into March. Number of new listings 50% higher than the 10-year normal, 50. But sales 80% higher than the 10-year normal. And now here in April, lockdown and all the other fun stuff we've been experiencing, now listings back again, only 13% above the 10-year normal. Meanwhile, what happens? Sales keep trucking. So sales 54% up over the 10-year average. So you saw that differential between listings and sales sort of close the gap as we got into March, and then it opened right back up. Same deal for the other cities in Niagara. We'll look real quickly at St. Catharines. January, the number of new listings 24% under, number of sales 21%. So roughly a 45% differential. February, listings started to chug, 11% under the 10-year norm, but sales still 20% above. And then we got into March. Again, we were all excited, right? Listings were coming on. We're rocking and rolling. So listings are up 32% over the 10-year norm. Meanwhile, sales went 57% over the 10-year norm. And then here we are back to 0% change. So no change over the 10-year average in the number of new listings for the month of April. Okay, so there's 2 days left in April. So maybe it's going to be 2% higher than the last 10 years. And then 38% above in the number of sales. So that spread widened back open. And then Niagara Falls, the second highest volume city in Niagara, back in January, 13% under and 53% over in the number of sales. So that's huge, right? 13% under the 10-year average, sales 53% ahead. It got worse. February, yes, new listing improved to 24% higher than the 10-year average, but sales just kept pounding along at 69%. Now the gap got closed. Big listing inventory in Niagara Falls in March, 49% higher than the 10-year average, that was exciting. Sales 65% higher. So everything just leveled up. And then here we are in April 2021, and right now, as of today, 3% under the 10-year average. So a couple days left, might have a crack at getting to par with the 10-year average. Number of sales up though 33% over the 10-year average. So you see that spread was wide in January, closed in February, closed again in March, and just widened back out here in April. And again, it's the supply of new listings reduced because of the lockdown impact that we're seeing here in April, and we're going to see continuing into May as well as we go through this fun stuff. Okay, so that's one way to look at it. So let's take what I just talked about and put it on a graph very quickly. So you're going to see here for Niagara region for the number of new listings. So if you take a line that shows you the 10-year average for the number of new listings for January, February, March, and April, and you do the same thing but for January 2021 through April 2021. And how does this year compare? And you're going to see how significantly different this year is. For example, January was underneath as far as the number of new listings in Niagara region, and then it absolutely stormed back and had a really strong March. And you can see it's pulled right back in April again due to the lockdown. Same deal for St. Catharines. You'll see January and February were below the 10-year average, and then a serious response in March. We were all excited. There was a parade. There wasn't, but there was kind of in our minds. And then here we are back in April, and it's pulled right back again. I think you could directly tie it to the lockdown, as April 2021 has pulled right back to what the 10-year average was. And then same deal in Niagara Falls. Again, it was below in January, huge boost up into March, and then now it's going to be at par or a notch under the 10-year average. So then you compare that to sales. Huge difference. So January, February, March, April, almost across Niagara has destroyed the previous 10-year average. And these graphs will show you. So here's Niagara region, number of homes sold, January, February, March, April 2021 versus the 10-year average. So January and February were very strong, but look at how wide that gap became in March. Now April is still strong, but it's pulled back. There's some retreat, but not huge. But it has eased back. You'll see that consistency across all markets. Same deal in St. Catharines. January and February, very strong. March, incredibly so. April pulled back a notch. Still strong, but came back a notch. And then same deal here for Niagara Falls. January, February. Actually, February is really strong in Niagara Falls. March, very strong. April pulled back a notch, but still well above historical norms for the month of April. So why is this important? How does this relate to you? What does this mean? It really it's extremely complex and extremely simple at the same time. And the dynamics behind why is there so much demand and why is there reduced supply? There's a whole bucket full on either side of the aisle as far as what's going into those two things to create the disparity. The polarization of the market, we have really big winners and we have a lot of losers that are losing out or missing out. Is it changing? Sure, it's changing. But is it changing across the board? No, it's not. There's price sensitivity. There's price strategy that's factoring in. If somebody has a house on this side of the street for $349, that sells for $450, and this one over here sells, is listed for $299 and sells for $520. Why does that happen? There's inconsistencies across the board with that. There's different strategies. People want to see 48 showings and 15 offers in order to feel like they had their best kick at the cat. Whereas you have other listing agents that are putting it up and saying, look, here's market, let's go right here. We're only going to get 14 showings and maybe 1 or 2 offers, and they sell within a few percent of each other, right? What's the better strategy? Well, that's the grand debate. So there's so many variables that are going into create the soup that we're all experiencing right now. When you look at on a monthly basis where the number of new listings and the number of sales are, the big difference right now in the market that we're all experiencing is it's tight. Back 8-9 years ago, there might have been 3 listings for every sale. It was wide open, so buyers had so much more choice. And now you can see here, Niagara region, the number of new listings versus the number of sales. You can see in January and February how tight it was. It opened up a bit in March when the new listing inventory boosted up, but it's pulled back again because sales keep hammering away. But meanwhile, the number of new listings are pulled back because of the lockdown. And the same thing here for St. Catharines. So that's the big thing is, we had this progress happening in March. Things were improving. There was more inventory. There was more choice. The market was starting to find its feet in a typical spring market. And the lockdown really has sort of tied one arm behind the arm of the spring market. So we're going to have to wait. That's the long and short of it. So I think hopefully that was helpful. The main point I wanted to make is just that there was a pattern that we saw happening, and now there is a pattern, unfortunately, that we're seeing because of the lockdown and the impact that's having on new listing inventory. This is the same pattern we've seen repeat on previous lockdowns before as well, because the demand side does not adjust at the same rate that the listing side does. It's kind of like the first time we saw it was really back in March, April of 2020. Remember that? Oh, great times. Okay, so that's a wrap. Hopefully this helped. If you have any questions, you know where to reach out. I'm going to put some links down below or above or to the side wherever you're seeing this. Otherwise, we hopefully you found this helpful, And if you want to reach out, look at even my screen's done. Okay, thanks. Take care. Bye.